Good evening, everyone.
गुड इवनिंग
गुड
सर।
इवनिंग सर।
Good evening. अरे दिगंत सर है क्या क्लास में आज?
यस सर।
कैसे चला दिगंत सर, मॉक दिया कि नहीं?
सर दो दिए, अभी बाकी है एक और देंगे।
एक और कौन सा दिया? प्रैक्टिस 1, प्रैक्टिस 2?
डन विद दैट। थोड़ा एमसीक्यू में लोचा हो गया, एक दो समझ में नहीं है। क्लास के बाद भेजता हूँ सर आपको।
किस में?
सेक्शन वन के समझ में आ गए, सेक्शन सॉरी, प्री मॉक वन के तो समझ में आ गए थे। वो सेकंड वाले में थोड़ा डाउट है, अभी दो तीन मॉक क्वेश्चंस एमसीक्यू के।
प्री
सेक्शन
मॉक?
एक।
प्री मॉक का क्या?
नहीं नहीं, अरे सॉरी सर, जो अभी सेकंड प्रैक्टिस दिया था ना उसमें
हाँ।
प्री मॉक तो देना बाकी है अभी।
ओके। कोई
वही।
नहीं तो 9 क्वेश्चन इजी थे कि नहीं? 9
हाँ, वो
इम्पोर्टेंट।
मतलब ऐसे ही लगा कि मतलब ऐसा 30 में से 20 क्वेश्चंस तो आराम से हो जाएंगे।
हाँ, कोई नहीं
फिर
बस।
थोड़ा और केयरफुल रीडिंग, थोड़े और हो जाएंगे आराम से। मैंने तो सिली मिस्टेक कर दी थोड़ी।
कोई नहीं बेटे, वही चाहिए। अगर मेरे पास एक और मॉक पड़ा है, वो नया मॉक है। बट क्या है कि वो पोर्टल पर है, सुपर इन्फिनिटी के पोर्टल पर है, देखना पड़ेगा। बट मेरे पास पीडीएफ है उसका, बट वो टाइप नहीं। कोई नहीं, चलो। गिव दी अदर मॉक्स। एक्स्ट्रा मॉक्स चाहिए तो किसको अपडेट कर देना मुझे, मैं देखूंगा, अवेलेबल है तो दे दूंगा, नहीं तो नहीं। चलो अभी
सर
आइए
क्या
सही।
एक्स्ट्रा नोट्स भी पूरे नहीं हो रहे हैं।
अरे बाप रे बाप, श्रेया बेटा, व्हाट अबाउट यू?
सर मैंने अभी प्रैक्टिस पेपर 2 का मॉक दिया क्लास में आने से पहले ही, जस्ट
अरे
खत्म।
अरे कोई नहीं, अपन बात करेंगे क्लास के बारे में अभी। आई कांट वेस्ट अदर्स टाइम।
हाँ यस सर।
चलो देन लेट अस स्टार्ट एवरीवन। तो आज लास्ट डे मैराथन का। चलो पार्ट 3। वी हैड कंप्लीटेड IAS 2, IAS 41, IAS 21, IAS 37 हो गया था। IAS 8, अ वेरी इंपॉर्टेंट थियरी क्वेश्चन आता है इससे। अ वेरी इंपॉर्टेंट टॉपिक IAS 8, IAS 10, एंड द कैलकुलेशन दैट कम्स, वन क्वेश्चन दैट इज रेट्रोस्पेक्टिव एडजस्टमेंट। इट इज माय फेवरेट क्वेश्चन, मेरा तो फेवरेट है, आपका मालूम नहीं, but very important MCQ question. Chalo, let us start. IAS 8, basis of preparation of financial statement. First, the name of the standard was accounting policy, estimates, and prior period error. The content is same. Here and there some changes are there. Your IAS 1 has been replaced by IFRS 18. So IAS 1, whatever we have theory is included in this. Yes, sir. Chalo then. IAS 8 provides guidance on three general matters, that is, fair presentation and how it is achieved, compliance with IFRS accounting standards, going concern, accrual basis of accounting. Fair presentation means what? That each and every item is fairly presented in the which is fairly presented so that the financial position and performance and the cash flow is shows a true value. Yes, sir. When will we say that the presentation is fair? When we follow substance over form, when we follow faithful representation, free from error, neutral, etc. And what is the statement the company should give? MCQ के लिए important. The entity should make an explicit and unreserved statement that they comply with IAS and IFRS. Their financial statements comply with IAS and IFRS. If I am following IAS and IFRS, I have to follow. I comply with. If I say, let's say IAS 13 or IAS 10 is applicable to me, I will follow. It's not that I will follow 50% of the IAS and IFRS and 50% US gap. It's not allowed. MCQ, remember. Going concern. What does going concern means? Going concern means that business will continue for the foreseeable future. What are the indicators that the company will not be a going concern? A lot of problems. So major restructuring or debt is not repaid, impairment losses are huge, negative cash flow, etc. If going concern is that, then what should we do, sir? What should we do? The accounting will be done. The financial statements will be prepared on liquidation basis and breakup basis. Yes, sir. Then accrual basis means income and expenses are recorded when they are incurred rather than when the payment is received or payment is paid. So this basic. Now accounting policy. Accounting policies are what? So accounting policy are specific principles, basis, conventions, rules, practice, etc. All those things. फालतू का है, कुछ इतना important नहीं. But what is important? To identify what all are your accounting policy. Like we say, cost model, revaluation model. Do not do the silly mistake. Huh? Many students, after saying 1,000 times, also still they say cost model, revaluation is what? Accounting estimate. No, accounting estimate is what? The method of depreciation. Then FIFO, weighted average cost, Then in your borrowing cost, we capitalize it, we record in expense. That is also an accounting policy. In government grant, we have two methods: reduce from the cost of the asset and record as deferred income. That is also an accounting policy. When coming to revenue, if I record revenue on cash basis or I record revenue on accrual, that is also an accounting policy. Leases, recognition exemption, and right to use asset and lease liability. That is also what's an accounting policy. These all are what accounting policies. Yes, sir. Then, sir, selection and application of accounting policy. Sir, how should we select the accounting policy? Very important from theory point of view. Sir, when IAS and IFRS is available, if IAS and IFRS is saying something, follow that better. IAS and IFRS is saying something, follow that. Yes, sir. When IAS and IFRS is not available, sir, what should we do? Management will apply judgment. Management will apply what, sir? Management will apply judgment. When management is applying judgment, what should they keep in mind? Relevant and reliable. If you're making any accounting policy, it should provide relevant and reliable information. Relevant means material, it should affect the decisions. Reliable means what, sir? It should be true. Simple. Sir, when management is considering the judgment, what all they'll consider? If an accounting policy is not available, let us take an example. Like today, I receive a grant from the government. How will I record? I will follow IS 20. But if I say I receive a grant from a unknown person, I receive a grant from unknown person. How will I account then? There is no accounting for this, no. There is no standard for this. So what we will see, management will see whether any similar transaction is there or not. If any IS or IFRS is recording any similar transaction, we will consider that. The definition and recognition criteria in conceptual framework. So is that if there is no similar transaction, we will go with conceptual framework. Your Bible, your Bhagavad Gita, we say, yes, sir, for accounting. Then so conceptual framework also, we are not able to apply conceptual framework. Then we will see what other standard setting bodies like US GAAP in India, what we follow, etc. We'll see. Then, so that is also not applicable. So in that case, what we see? Then accounting literature. What is the industry following? What is the industry practice, etc. We will consider these. Yes, sir. Then coming to consistency of accounting policy. Whenever we follow accounting policy, there should be consistency. Sir, can we change accounting policy? Yes, when the standard is synced. As well as when, sir, when it is required by IS and IFRS, when, or the other one is what? When it provides relevant and reliable information. Remember in IAS 40 standard was saying what? You can follow, you can change the model from cost to fair value. But from fair value to cost model, if you come, will not provide fair presentation. Simple. Then following are not considered as a change in accounting policy. Very important from MCQ point of view again. If I say today I have a PP, I record a PP in my book, and after 6 months, sir, I'm using this for my investment purpose. And PP was using cost model, investment property is using fair value model. Cost model, fair value model. Will this be change in accounting policy? Nahi, Baba. It's not a change in accounting policy. It's change in the use of the asset only. Do not say that it's change in accounting policy. Then next one. Today I have not recorded an asset. Today Reliance company has purchased an asset for $10. They have just purchased a $10 ka asset. They have not recorded this today. But after 1 year, this asset becomes what? $1 million. It is material, so they will record this. So in that case, at first date we did not record. After 1 year we are recording. Is this change in accounting policy? No, sir. This is also not a change in accounting policy. MCQ theory. Then, sir, accounting for a change in accounting policy. Accounting for a change in accounting policy. Sir, whenever accounting policy is changed, what should we do? Everyone. If any IS or IFRS is mentioning transitional provision, follow that. Like we have seen now, sir, IAS 1 has been replaced by IFRS 18. IFRS 18 is giving the rules and regulations, follow that. Yes, sir. Now there was a shift from your old lease accounting. Lease had a different standard, AS something. Now we have IFRS 16. When shifted from IAS to your IFRS, there was some transitional provision. How should you shift it? What should you do? That will be provided by respective standard whenever there is a transition. Like we have seen now, IAS 1 to IFRS 18. Then, sir, if IS and IFRS will not include any transitional provision, sir, IS and IFRS is not saying anything, then we'll apply retrospective. And if change in accounting policy is made voluntarily, in that case also retrospective we will follow. Sir, retrospective ka meaning kya hai? What does retrospective means? Retrospective means what? Doing the change from the day one when the transaction was done. Doing the change from the day one when the transaction was done. Then see here now, retrospective application means what? The opening balance of each affected part of equity or the earliest period presented is suggested, and the comparative amounts are disclosed for each prior period as if the new policy has been applied. If it is not practicable to apply the effects of change in policy, then from the day when it is possible, do it. So they are saying that, is it easy for me to change the inventory model from FIFO to weighted average cost from 30 years before? Not possible. So from I say after 10 years it is possible, or before 10 years it is possible. Then do from that date. Simple. Yes, sir. See everyone, understand this, you will understand retrospective impact. I mentioned this is a year. This year is what, 2023. This is 2024, sir. Here the company was following FIFO, FIFO, FIFO. The company was following what? FIFO, sir. The company shifted to weighted average cost. Now till here, the company has followed what? FIFO. Now the company will present the balance sheet and P&L for how many years? If the company is presenting the balance sheet and P&L for this year, they will present previous year also. Why? For comparison purpose. Simple. For comparison purpose. Now, sir, here we followed FIFO. Here also we followed FIFO. So it's a change in accounting policy. The company is saying that we will change the accounting policy. Instead of following FIFO, we'll follow weighted average cost. Now the company was established in 1995. From that date till this date, we have to do retrospective impact. Yes, sir. Now, will you sit and prepare each balance sheet and P&L from 1995? Nay, Baba, nay. What should you do? Whatever is the change from 1995 to 31st 12 2022, 2023, on 1st January, you prepare a balance sheet. You prepare a balance sheet. On 1st January 2023, you prepare a balance sheet. Whatever is the change for the previous 10 to 20 to 25 years, you will make a change. See now, the change is what? uh, FIFO, as per FIFO, the value of the inventory will be 2000. As per weighted average cost, it will be 2500. So, what is the increase in inventory here? So, 500. If the inventory is increasing, what will happen to the asset will increase? What will happen to retained earnings, Baba? If your inventory is increasing, what will happen to cost of sales? Inventory increasing, what will happen cost of sales? If my closing inventory is increasing, cost of sales will, say me everyone, cost of sales को क्या होगा?
Reduce.
Will reduce. So cost of sales will reduce. What will happen to profit? So profit will increase. If profit is increasing, what will happen to retain earnings? So retain earnings also increase. Yes, sir. So this is known as what? Third balance sheet concept. In class, we have discussed in detail. We have spent more than 25 minutes or 20 minutes on this. ये third balance sheet concept है. Then what should we do for these 2 years, sir? These 2 years change the profit better. These 2 years change the profit. Simple. These 2 years change the profits and the figures. Now, when you change the opening inventory, can I say the opening inventory balance will change? Your opening inventory will change. Your closing inventory will change. Your opening will change. Your closing will change. And your opening inventory, closing inventory, opening, closing. Opening inventory has what? You have to see, sir. Opening inventory has indirect or direct relationship, everyone. Opening inventory has direct or indirect relationship. So my closing inventory is increasing. If my closing inventory is increasing, what will happen to cost of sales? Closing inventory increasing, COS will come down, sir. What will happen to profit? Profit will increase, sir. If my opening inventory is increasing, what will happen to cost of sale? That also will increase. Profit will decrease, sir. So opening inventory has what? Opening inventory has indirect relationship. Closing inventory has direct relationship with profit. So here I say the profits will be affected. So there will be a impact in the profits here. So respective changes will be made for the 2 years. This is known as retrospective impact. Yes, sir. So if you remember everyone, this was a question which I taken and I mentioned a lot of time MCQ comes regarding this. In your pre-mock also MCQ है इसके बारे में. So see now everyone, I say that the company was following what? The company was following weighted average cost. They are shifting to FIFO. If the company was following weighted average cost, now they are shifting to FIFO. What is the increase every 1 year? So the increase is 2000. So my inventory is increasing by 2000. My closing inventory will increase. What will happen to my retained earnings here? My closing inventory will increase. What will happen to retained earnings, sir? Increase, sir. So I increase the retained earnings by 2000. Yes, sir. But in the current year, what the company is following? The company is following weighted average cost only. But we have to change the profits now. Now see, sir, opening inventory कितने से बढ़ रहा है? Sir, opening inventory is increasing by 2000. If opening inventory is decreasing, profit will come down by 2000. Yes, sir. Then, sir, the company followed FIFO, that is 12,000 weighted average cost. We have to follow FIFO. So, what is the increase in inventory? 4,000. Sir, if the closing inventory is increasing, what will happen to your inventory? Profit. Inventory will increase. This closing inventory will increase. Profit also will increase. So, 2,000 is the decrease in profit, and then 4,000 is increase in profit. What is the net increase in profit? So, 2,000 is net increase in profit. So this is the way you have to do. So the examiner can ask you a question. What is the value of the retained earnings here? What is the profit figure? By what value the profit should be adjusted in the current year, etc. So with this, the retrospective impact is done. Then coming to disclosure. So what are the disclosures we give? The nature of change in accounting policy, reason for change in accounting policy, then effect of current year and prior year due to change in accounting policy. If retrospective implication is not practicable, then mention it from what date, what is the logic, reason, etc. Then this is also important for your MCQ again. Sir, when a change is due to a new IFRS, the following must be disclosed. So, whenever a new IFRS comes in, what should we disclose? So, because of the new IFRS, there is a retrospective impact. What should we disclose? Title of the new IFRS and the nature of change in the policy. What is the date? What is the applicable date, etc. You have to mention these. And what is the effect on future periods? So, with this, your accounting policy part is done. Okay, sir. एनी डाउट्स टू एनीवन इन अकाउंटिंग पॉलिसी? किसी को कुछ डाउट्स है? Then coming to accounting estimate. Sir, accounting estimate means what? Accounting estimates means what? Why do we do estimates? When do we do estimate? Sir, estimate is done when the actual figure is not available. So many times in financial statements, many of the items cannot be measured. So that is the reason we follow what? We follow accounting estimates. So estimates involve judgment on the basis of latest available and reliable information. So if I want to make an estimate today, whatever data I have, on that basis I make. So after 3 days, some new data is available, my estimate will change. Same like for provision, bad debts, NRV, method of depreciation, warranty obligation, useful life, residual value. All these are what, sir? All these are your accounting estimate. So for accounting estimate, how should we apply the change? The change is what? Prospective. Prospective means from today only consider the change. From today only consider the change. Yes, sir. So prospective recognition means change is applied to a transaction from the date change in estimate. If you remember your IAS 16, whenever useful life residual value was changing, what we used to do? We used to consider the change from that date only. Yes, sir. Now, why will your accounting estimate change every year? Why it will change after 1 or 2 days or 3 days? Because new information is available. Some new development is there, sir. We have more experience. As we have more experience, the estimate which we do will be a good one. That is the reason. Then, change in accounting estimate. Will change in accounting estimate relate to prior period error, beta? Change in accounting estimate will never relate to prior period error. Understand that. Then change in the basis of measurement. Whenever the measurement basis is changed, is this known as accounting estimate or accounting policy? It is accounting policy, not estimate, like your cost model, revaluation model. When it is difficult to distinguish between a change in accounting policy and change in estimate, what we will follow? It is an accounting estimate. It is an accounting estimate. Yes, sir. So, what are the disclosures? the nature of change in accounting estimate, amount of change in accounting estimate, effect due to change on current and future period. If not possible to estimate the effect, then just disclose the facts. Yes, sir. Now, a question to everyone. Your cost model and revaluation is what? Accounting policy. Then, whenever we do revaluation, we should follow retrospective treatment. No? Then, why are we following prospective treatment as per IAS 16 then? Your cost model revaluation is accounting policy. Whenever change in accounting policy, we have to follow retrospective treatment. But still, we follow what? अरे बाप रे, एस्टिमेट कैसे है रे? अभी तो बोला कॉस्ट और ये ही है, एस्टिमेट नहीं है वो. अदर्स, cost model revaluation model is accounting policy. Yes, sir. Yes, sir. But one more thing, understand. Sir, whenever we follow revaluation model, then we should apply revaluation model from the day when we purchase the asset. Do we do that in IAS 16? No, no. Why? Because IAS 16 says what? IAS 16 says one important point that you have to follow prospective treatment. So whenever any standard is mentioning what should be done, follow that. Do not directly jump to IAS 8. IAS 16 is specifying that follow prospective, we will follow prospective treatment of. Yes, sir. So accounting policy done. Then coming to prior period error. So there is an error. If there is an error in the current year, is this prior period error? Nahi baba. If the error is in the current year, you correct it. So it will not be a prior period error. If the error is done in the previous year, in 2024, 23, 22, it will be what? Prior period errors. So why will prior period errors occur? Due to omission or failure to use the information which is available today. Misuse, misstatement, omission. We are misusing the information that is available. Information was available, but we did not consider it. That is also an error. So the types of errors are what? Instead of recording 2 plus 2, 4, we have recorded 22. Excuse me. Then applying any wrong accounting policy. Then misinterpretation of the facts in definition of IAS 10. Instead of adjusting, we have recorded this non-adjusting. Then fraud, omission, all these are type of errors. So here also the accounting is done how? Same retrospective impact. Retrospective impact. If I say the error is in this year, the error is in the previous year, will third balance sheet come into picture? Nine. Will third balance sheet come into picture? No. Sir, if the error is relating to this previous to previous year, then third balance sheet will come into picture. And this we have seen what? A lot of time this has been tested in your single entity question. They say what? They say one thing. Ki sir, the error which have been identified a fraud of 4 lakh rupees. Out of this, 1 lakh relates to previous year, 3 lakhs relates to the current year. So current year fraud you recognize in P&L as an expense. But this 1 lakh, how will you adjust? Here on this date, you calculate the retained earnings. You have opening retained earnings, adjust it here as a prior period error here in your statement of changes in equity. Important for single entity point of view. Then, sir, accounting for prior period periods, see now, two situation. Error relates to earliest period presented. Restate the comparative amount of previous year. Restate the asset liability equity in previous year. Third balance sheet is not required. Yes, sir, because it relates to the previous year or the earliest period presented. Sometimes the company will present P&L for 1 year. Some companies will say we provide comparative for 4 years. So then the fourth year, start of the that year will be earliest period presented. Sir, if the error relates to period before earliest period presented, then third balance sheet is required. And then we restate the retained earnings assets, and then for the next years also we have to change each and every value. Disclosures, nature of error, amount of error, if retrospective restatement is not possible, what is the reason, etc. we have to disclose. So with this your IAS 8 is done. किसी को doubts IAS 8 में? It's theory, so I'll not go in detail. As I mentioned, key points which are important for your exam, I mentioned that. IAS 8 done. Coming to IAS 10 now. Yes, sir. See now, IAS 10 says what? Events after reporting period. Yes, sir. See now, events after reporting period. Definition. What does this mean? Events after the reporting period are those events both favorable and unfavorable. So see here now, see the timeline. This is the timeline. My accounting period is what? 1st January to 31st December. Sir, on this date, is it possible to publish the financial statement? Never. It's not possible. On that same date, we can publish. So the accountants will take 1 month, auditor also will take some time, and then the balance sheet and P&L will be ready. So after, let's take 1 or 2 months or 3 months, the board of directors will approve this, because this 3 months is a time period which is required to prepare the balance sheet and P&L. And after this 3 months, board of directors will sign this. Once the board of directors will sign, it will be published to the shareholders. Once it is published, after a few months, after a few days, AGM will be done. And in this AGM, it will be decided what we will be doing in the next year, etc. What will be the focus. Now, the standard IAS 10 will apply for what? Events which are occurring on in between this. Events which are occurring between your reporting date and your date of approval. Date of approval. Date of approval. Simple. Yes, sir. Then what we say, these all period, whatever event is happening here, the event evidence is that, sir, some condition was there here. Here, I had a customer. So the customer condition was not good, sir. The customer's condition was not good. I recorded a bad debt of 1,000. But after 20 days, after the reporting dates, the customer shut down his business. I had to receive from him $10,000. So what will I say? Instead of this 1,000, how much is the bad debt I'll record now? I will record 10,000. So we say in this period, confirmation will be there regarding a condition which is there here. On 31st, well, obligation, any condition, etc. is there. So see now, types of events, adjusting, non-adjusting. Adjusting event means what? Provide evidence of conditions that existed at the end of the reporting period. Adjust the amount recognized in financial statement. In addition to this, make separate disclosure. We have to do the adjustment also, we have to provide the disclosure. Non-adjusting event, indicative of condition that arose after the reporting date. Sir, condition only arose after the reporting date. Condition, evidence both after the reporting date only. So it's a non-adjusting event. But sir, should we disclose it? Yes. You should disclose it if it is material. When will you disclose it? Sir, we will disclose it if it is material. If it is what, sir? If it is material. Yes, sir. What should we disclose, sir? The nature of the event and what is the financial effect, if possible. So these are the examples which I have written, and we have discussed each and everything in detail in the class. But now let us just have a look to these examples. And I mentioned 99.99% out of these 18, 16, 14 to 15 will be tested from this examples. See now, example, settlement of a court case after the reporting date that confirms obligation existing at the end of the reporting date. I said today I recorded an obligation of 1,000. Sir, after 20 days, I am paying the obligation. The court has ordered me to pay $10,000. So what will I do? Instead of recording the provision as 1,000, I will increase this to $10,000. Because here on the balance sheet date obligation was there, sir. I estimated 1,000, but the court is saying you have to pay 10,000. So I change it. This standard works on what? Faithful representation. True information should be provided to the shareholders. Then a fraud was discovered. Sir, we identified a fraud in this year. We identified a fraud this year, but the fraud was done in the previous year only. One of the employees mentioned that we have identified a fraud, but the fraud was done in the previous year. This is also what? An adjusting event. Fraud was there in the previous year. You did not identify, it is your mistake. Then debtors suffering from heavy losses at the year end, and then after the year end, bankruptcy, yes, sir. Then discount provided for goods which are sold. No, discount provided after reporting dates, goods sold before we have sold the goods. Goods are already purchased, let's say in November, but discount is provided in January. Adjusting event, yes, sir. Then determination of the bonus. Sir, company saying that we will pay bonus to the employees, but the bonus amount was not calculated. After 25 days, 30 days, once the PNL is ready, they have calculated the bonus. It will also be an adjusting event. because on the balance sheet date we knew that we have to pay a bonus, but the amount which we estimated was wrong. So we correct it again, yes sir. Then sixth one, determination of cost of the asset after the reporting date. We have purchased the asset in the current year, but the cost is available, or we get to know about the cost of the asset after the reporting date. That is also adjusting. Then, sir, sale of inventory below cost. Today I record an inventory at cost. After that, I excuse me. I say that I am selling this inventory for. I record the inventory at 100. I record inventory at 100 here, but after 20 days I sell this at 80. After 20, this is also an adjusting event. Why? Because the NRV estimate which you have done is wrong. The NRV which you have calculated is wrong. You have to adjust it so that faithful representation is provided. But if I say, sir, this decrease of 20 was due to a flood here. Due to a flood. Will this be adjusting, everyone say me? This 20 decrease was due to a flood. Will this be adjusting? No, it will not be an adjusting event. Yes, sir. So what are the steps? Step 1 and step 2. What did I mention in the class? Step 1 is what? Check evidence of the event after the reporting date, but before approval, and check regarding this evidence any condition was there on the balance sheet date or not. Yes. Then coming to non-adjusting events, see like loss by fire after reporting date, change in the fair value of the estimate after reporting date, major business combination, sir, losses there, flood, fire, etc. Change in fair value, sir. After the reporting that there is a change in fair value, that is also non-adjusting. So major business combination after reporting date. Negotiation to acquire the land started before reporting date, but transaction was completed after reporting date. Negotiation is done in the current year, but with the help of negotiation, if negotiation is done, is it for sure that you have obligation on your head? No. So it's non-adjusting event. Then announcing a plan to discontinue operation. Yes or no? Sir, we announced the plan to discontinue an operation after the reporting date. I mentioned in IFRS 5 that both the things that the it should be announced also, etc. Before that, both the conditions, sale must be highly probable, asset must be available for immediate sale. Both should be on what date? On the balance sheet date. Then abnormal large changes in the foreign exchange price are decreasing or increasing. Due to that we have gain or loss. Then any issue of new shares. So new shares are issued. In that case also we say what it is. We say it's a non-adjusting event. So dividend declared after the reporting date. So dividend are declared after the reporting date. That is also what? A non-adjusting event. Why? Because at reporting date obligation is not there. Can I hear? Obligation is not there. These are the examples which we have discussed. Now coming for dividend and some special cases. See now, sir, inventory condition existed. If condition is there, adjusting better. No condition, non-adjusting. If inventory is damaged due to fire, flood, etc., non-adjusting. So the dividend declared before the year end are adjusting event. Sir, dividend was declared in the current year. It was declared before the year end. It is adjusting. Sir, dividend was declared after the reporting date. Non-adjusting. What is the logic, sir? Obligation is not there. Obligation is not there on the reporting date. Dividend proposed. If dividend is proposed, is it for sure that the company will give the dividend? No. Dividend will be proposed by the directors and it's just a recommendation. It is just a recommendation. Understand that. Yes, sir. Then going concern. Going concern we have discussed. But today I say fire is there at the factory. If fire is there at the factory, you will say non-adjusting event. But due to this fire, we will not be able to continue our business. Going concern will take a hit. In that case, what we say, even though it's non-adjusting, if going concern takes a hit, it will become what? Adjusting event. It will become an adjusting event. So with this, your IAS 10 is also done. Any doubts to anyone? Yes, sir. So with this, your standards are done, Baba. Yes, sir. So now, कौन सा टॉपिक ले? Let us complete conceptual framework. Yes. Small theory. not very important, but yeah, from section A, point of section A, very important. See now, everyone, conceptual and regulatory framework. Yes, sir. What is the purpose of conceptual framework? Why conceptual framework? What is the purpose of conceptual framework? As mentioned, conceptual framework is like what Bhagavad Gita or Bible for your accounting world. It gives the basic principles. Same purpose of conceptual framework is what? It helps the ISB to develop accounting standard. It helps the preparers of the account to develop accounting policy. It helps all the parties to understand and interpret IS and IFRS. Yes, sir. Then, a important point for your theory. Conceptual framework is not a standard. Understand? MCQ. Is conceptual framework a standard? No. And conceptual framework does not override any standard. If anything is specified in IS and IFRS, we will follow that, not your conceptual framework. If you see the conceptual framework and your standards, that is not a proper link. Many standards will disagree with the conceptual framework, but still we follow IS and IFRS. Yes, sir. So why do we report? Why do we report? For the users, potential investors, lenders, and other creditors, for primary users. Why? Sir, economic resource. They get to know whether they want to invest in this company, whether the company is doing good or bad, etc. As well as management stewardship, whether management is managing the business properly or not. Yes, sir. What is the fundamental principle for preparing the balance sheet and P&L? MCQ. The fundamental principle for preparing the balance sheet and P&L is what? Going concern assumption. Yes, sir. Then coming to qualitative characteristics of useful financial information. So what are the characteristics of the financial information? Which financial information? The information which we record in balance sheet, Baba. There are two characteristics: fundamental, qualitative, and enhancing. So fundamental has two things: relevance and faithful representation. When will you say it is relevant? When it affects the decision of the users. When it affects the decision of the users. Sir, how do we decide whether it's relevant? Based on materiality concept. Based on materiality. And how relevance will help? So relevance will help to predict the value in future. Today I say that my revenue is $10,000. It's material and it will also help to predict the future revenue. Yes, sir. And relevance. Okay, sir, in future we have revenue of 20,000. That 20,000 will help what? To predict the future value as well as to confirm the prediction which we have done in the previous year. So predictive value, confirmatory value it will provide. And these are interrelated. We have seen with the example. Materiality, sir, it is based on what? Materiality. And materiality is what? Entity specific. Yes or no? It depends on entity to entity. Is materiality only based on numbers? No. If a fraud is done by a director of 10 rupees or $10 also, it is important because the director is at a good, at a higher position. That is the reason. Then material is a uniform threshold. Yes, sir. And it varies from company to company. When will you say faithful representation is there, everyone? When will you say faithful representation is there? When the entity will comply with IS and IFRS? Yes, sir. And the information is neutral, complete, and free from error. See, free from error does not mean 100% right. Huh? Some of the other error can be there. Understand that. And substance over form, a very important point. So with this, the fundamental part is done. Now coming to enhancing qualitative characteristics. Sir, in enhancing, what do we have? In enhancing, what do we have? Four important things. The first one is what? Understandability, then your verifiability, comparability, and timeliness. Now, comparability means what? So, the information which we provide in the balance sheet and P&L should be comparable. When will you say the items in the balance sheet and P&L are comparable? When consistent accounting policy is followed. When consistent accounting policy is followed, we apply retrospective because of this reason, so that the comparison can be done. Yes, sir. And then we have learned something known as cost constraint, that is cost benefit analysis. The information which we provide, that information will have some cost. It should provide a benefit to the shareholders, your stakeholders, when compared to the cost. So the benefit should be more, cost should be less. Verifiability, sir. Verifiability means what? Whatever we record in balance sheet and P&L should be verified. Some evidence should be there. Like today I say I have cash of $10,000. How will you verify? You will count the cash. When I say I have inventory, $1 million of inventory, what will you do? You will do the counting and you will see the value. Either direct verification can be done, indirect verification means through some formulas, etc. xyz. Then sir, timeliness, information should be provided on a timely basis. Information should be provided on a timely basis. Then only, if information is provided on a timely basis, we say it is faithful representation. Yes sir. Then understandability means what? The information which we record in balance sheet and P&L should be presented properly, should be presented properly, so that the users can understand. Now, when coming to users, what is the standard saying? The user should have a general business knowledge, economic and accounting knowledge. If a science student comes and he's saying that I'm not able to understand balance sheet and P&L, it is his or her headache, because he or she does not know the basic concept of business, economics, and accounts. So the standard is, the conceptual framework is saying, for understanding, you should know the basic idea of these three elements. Yes, sir. So till here, this is done. Then elements of financial statements. What are the elements of financial statements? What are the elements which we record in the financial statements? Five things. Other than this, nothing. Asset, liability, equity, income, and expense we record, sir. Yes, sir. So what is an asset? Asset is a present economic resource controlled by entity as a result of past event. And what is economic resource? Is a right that has a potential. It is not probable, huh? The old conceptual framework used to say probable, but now it is potential. It is potential. If there is a potential to give you benefit, it is an asset for you. Yes, sir. Then liability. What is liability? An obligation to transfer out economic resource. Obligation can be legal or constructive. What is equity? Residual interest in the asset of the entity after deducting liability. Whatever is remaining, that will belong to equity shareholders. Then, sir, what is income? Income is what? Increase in asset. Whenever my asset is increasing, sir, like receivable, debit, receivable, credit, revenue. Revenue is what? Income. Whenever decrease in liability, if your liability is decreasing, it is an income. Can anyone give me an example when your liability is decreasing, it is an income for you? Anyone? If the liability is decreasing, it will be an income for you. In which case? Payable decreasing? Arre, payable is decreasing means what is happening? What is the journal entry you pass whenever your payable decreases? Reduction in payable. Arre, reduction in payable is income. Huh? What is journal entry you pass? Yes, okay. So are you recording anything as income in the P&L? ये बताओ मुझे journal entry में. You mentioned debit cash, credit payable. So both are done in what? Balance sheet only. Nothing is taken to P&L. Then how can you say that? No, no, I will share it. Arre baap re baap. If today I have taken a loan from you, I am not paying you. It is a loss for you. I have taken a loan from you, I am not paying you. That loan is a liability for me. If loan is a liability for me and I am not paying you, it is what? An income for me, no? I say I will not pay you. Whatever you want, you can do. Chalo. Sir, आपको तो loss है. You have a loss. For me, what? It is in income. Yes, sir. Then, sir, recognition and then okay, sorry, sir. Other than relating to contribution from equity participants. If equity shareholders are giving today shares, if equity shares holders are giving cash today and shares are issued, this cash is what? Increase in asset, but this cash which comes in is not a income. So if the capital contribution is done, will that capital contribution be your income? Nahi baba, nahi. Then sir, expenses means what? Decrease in asset like depreciation or increase in liability, sir. In that case, we say expense. Debit purchases, credit payable purchases is an expense. That results in decrease in equity other than those relating to distribution to equity participants. Will dividend be an expense? Say me, will dividend be an expense? What do you think, everyone? Will dividend be an expense? Dividend is not an expense. Understand, everyone. Dividend is not an expense. Dividend, that is the reason dividend when it is paid is not recorded in P&L. It is recorded in retained earnings. We have discussed better. Recall it, all important for MCQ. True or false आ सकता है, कुछ ना कुछ आ सकता है. Then recognition and derecognition. Recognition, sir, when should we recognize an asset or a liability? An asset or liability will be recognized when, or any element, whether income, expense, equity. When should we recognize, sir? When should we recognize? See, we should recognize when the element provides relevant and faithful representation. When it provides relevant and faithful representation, we say we will recognize it. We will recognize it. Sir, if uncertainty is high, sir, if there is high uncertainty over the existence, will it provide faithful representation? No, beta. So do we recognize? No. Sir, when the probability is low, do we recognize? No. Like your contingent asset, contingent liability, are they recorded in the books? No. Only disclosed. Why? Because of this recognition criteria. Because uncertainty is very high, probability is very high. That is the reason. Remember, in your variable consideration, IFRS 15, if uncertainty is high, we will not record it. Simple. Yes, sir. Derecognition. When we will derecognize an asset, sir? We will derecognize an asset when control is lost. Yes, sir. Or when future economic benefit is not there, or obligation is not there for liability. Yes, sir. This is derecognition part. Then coming to measurement, very important topic for MCQ. Measurement. Sir, at what value we will measure an asset or liability? Sir, we will record at historic cost. Historic cost means your purchase price. So current value means what, sir? Current value means today's value. Current value means what? Today's value. So which method should we use? Sir, in each and every standard it is mentioned. But whenever there is a new standard, it will be based on the principle of useful information, whether it provide relevance or faithful representation or not. Then historic cost. Historic cost means the purchase price. Current value includes what all? So current value includes three things. Fair value, your IFRS 13, sir. Value in use, we have covered in IAS 36. That is what? Future cash flows will discount. Current cost means what, sir? Current cost means if I purchase an item today in the market, in the same condition, what is the value? Yes, sir. So, current cost is very important, sir. Current cost is also known as what? Replacement cost. Current cost is also known as what? Replacement cost. You have to understand this example. See here, everyone. I mentioned that today I have an iPhone 15, 3 years old. Let's say I have an iPhone 15, it is 3-year old. I want to calculate the current cost for this. Current cost for this. I say today in the market, a new iPhone will cost how much for me? $1,000. Will cost me $1,000. iPhone 15. So how will I calculate the current cost? I will depreciate this 1,000 for 3 years. I will depreciate for 3 years and 700 I'll get. This is what current cost. So whenever a MCQ comes regarding current cost, what will you say? Current cost is what? Replacement cost. If I replace this asset in the market of same life, or it has been used for 3 years, etc., same life, etc., in that case, what is the value? That is known as current cost. Yes, sir. Then advantages and disadvantages for historic cost. A very important topic again for MCQ. Frequently tested in section A. So what are the advantages for historic cost? So same everyone. It is simple, easy to understand. It is reliable, sir. So less manipulation. The chances are very less, sir. Manipulation is done here. Yes or no? It prevents overstatement. Consistency is there, sir. Yes, sir. Then it is easy for comparison purpose. These all are the advantages. So what are the disadvantages? Mismatch. Sir, revenue is based on today's market value. Sir, when I record revenue, it is based on today's value. But sir, the depreciation which I record is based on the outdated value. So is this proper matching? No, mismatch is that. Asset value is outdated, does not or does not separate holding gains from the operating gains. Yes or no? It is difficult to separate what is the gain from this asset, what is the gain, etc. XYZ. Yes, sir. Then it will consider the impact of inflation. Yes, sir. Can I say when we when we use current value, when we use current value, oh no, not so. I'll come to current value later. Now, historic cost, will it consider inflation? No, sir. It will not consider inflation. It will show misleading trends because we can't compare when any other company is following fair value model or current cost, or as per the market terms, it is difficult to compare. These are the disadvantages and advantages of historic cost. Then coming to advantages of current cost. More relevant information, yes sir. Reflects inflation, yes sir. It considers the future cash flows. It will help us to predict the future thing also, because if we are using the today's market value, it will become easy for us to predict future based on today's value. And as well as, can I say one more thing, that current current value will reflect what? True value of the asset. Yes sir, true value of the asset. As well as, if I record the depreciation today, can I say this depreciation is in today's term or not? Yes sir, it is in today's term. As per today's market term, what is the value and the remaining useful life? Yes sir. What are the disadvantages for current value? Sir, many will not support this because of manipulation. Sir, current value does not have one single definition. There are 3 to 4 definitions, like we have seen value in use, fair value, etc. And sometimes the calculation of fair value is very difficult, like your IAS 38 fair value is not available. Sir, value news also includes a lot of cash flows which we have to consider. Then it is subjective based on management. Management will say, we think this is the fair value, so we have recorded it. And it is difficult to verify. How can we verify? So when coming to cost, we can verify. We can easily see the reports, the bill, etc. Yes, sir. So estimates, probability, everything is involved here. Less reliable. Less reliable. So with this, your conceptual framework is done. Any doubts to anyone in conceptual framework? No doubts? Here, what is important? Recognition, measurement, then your historic cost, current cost, etc. And qualitative and fundamental characteristics which you have to keep in mind. Yes, sir. Quality, fundamental enhancing. Now coming to regulatory framework, which is very important from here. For an MCQ, IFRS Foundation, IFRIC, Advisory Council, IFRS S1, ISSB, IASB, etc. Need for regulatory body or regulatory framework. See, conceptual framework alone cannot be used for the to publish the financial statement. Some of the other authority is required that keeps an eye on each and every company. That is the reason we have regulatory framework also in this notes. Now coming to IFRS Foundation. See now everyone, this is the diagram which I mentioned. Sir, IFRS Foundation is there. IFRS Foundation has formed IASB, and there are 2 more parties, and there is one more new one. Let us see that. See now, what is IFRS Foundation? IFRS Foundation is what's a not for profit public interest organization. What is the aim of the IFRS Foundation? To develop high quality, understandable, and enforceable global standards. We have to, this IFRS Foundation aim is what? We have to make the standards in a such a way that it can be used by each and everyone. Yes, sir. To make accounting standards as well as sustainability disclosure standards. First, the aim was only for accounting standard. Now, it is what sustainability disclosure standards should also be made. Sir, what are the 2 standard setting bodies? IASB, which develops IS and IFRS. International Sustainability Standard Board was developed in 2021 to develop what? Sustainability related, this one, what we say standards. Because nowadays in current world, as an investor also we see what? क्या देखते अपन? We see whether the company is good for the environment or not, etc. All these points. Sir, what is the objective of IFRS Foundation? IFRS Foundation, what is the objective? To develop accounting standards which are clear and good one. They promote the use of the standards. They promote the use of the standards and application of these standards all over the world. They try to connect with other countries also, and they form a meeting with them. They guide them. They also consider the entity's need. If an entity is big, small, medium, that is the reason when you come to SBR, you study SME. SME has its own IS and IFRS. There are differences. Then this IFRS Foundation will try to do what? Will try to connect with the National Accounting Standard Board. They will try to convince them to follow these accounting standards. You can make any changes as per your country laws and regulations, etc. Yes, sir. This is the duty of your IFRS foundation. Yes, sir. Then coming to the next one, IASB. See, IASB. IASB is an independent body that issues IFRS standards. It is an independent body, it's not dependent on anyone. It creates what clear, enforceable, and high quality accounting standard. IASB cannot enforce compliance. Will IASB alone enforce any compliance? IASB does not enforce compliance. It is done by IFRS Foundation or the each and every country's body. Like in India, we have SEBI or etc. Other bodies are there which have an eye. But IASB का duty क्या है? IASB only has one duty to make standards. Simple. Then next one. When IASB is making accounting standards, they keep in mind the point of view of other countries also, so that it becomes easy for them to follow. That is the reason we say ACCA can work in 180 plus country. Why? Because the the standards which we follow, IAS and IFRS, forms a base for other accounting bodies also here and there. Then, sir, what will the national standard body do? Like in India, we have the national standing body which will develop IAS and IFRS. What they will do? They will pass a discussion paper and exposure draft in the country, saying that is there any other point of view regarding this accounting treatment, etc. Yes. IASB का aim क्या है? What is the aim of IASB? Reduce alternatives which are available. See, when coming to India, India has its own standards. Here and there some changes are there. US has its own standards. So each and every country, if they have their own standards, will it be easy for the investor to read the financial statements and invest in the company? Not possible. That is the reason globalization. In that case, that is the reason IASB came up saying that we will develop standards which can be used all over. Yes, sir. Any doubts to anyone in IASB? Important points for MCQ. What is the mission of IASB? MCQ, very important. Transparency, accountability, and efficiency to financial market worldwide. This is the mission. Remember the mission. What is the mission? Transparency, accountability, and efficiency. Remember T. Remember T, you can understand. T means what? Transparency. E means what? Efficiency. A means what? Accountability. Yes, sir. It serves the public interest. Yes or no? It will help the public interest to understand what is the growth of the country, company, as well as what will be the growth in future. All this, whether the company is in a good position or not. All this are the missions for your IESB. But important are these three words. Yes, sir. Then advisory council. What will advisory council do, sir? Advisory council acts as a consultation forum. Advisory council will do what? Advisory council will take the viewpoint of other thing. They take viewpoint of accountants like CAs, ACCA, CPA, CMA. They consider, okay, they are saying that there is an issue in this standard. Or also they will have meetings with what? Big four partners also. So they get to know, okay, what is the issue in the accounting world? Which accounting they feel it is wrong, it is complicated, what is the issue, etc. So yes, sir. It's a like a forum. Then the main objective of advisory council is what, sir? Advise IESB on priorities and key decision. It will advise which body will advise IESB? Advisory council will advise IESB. What are the key matters they have to focus first on? What should be their priority in the coming 1 year or 2 years? It also communicate the stakeholders' opinion on the major standard setting project. If they are setting any standard, advisory council, as I mentioned, it's like a forum. They connect with KPMG heads, directors, partners, etc., and get their point of view whether this is right or wrong. Yes, sir. As well as they provide additional advice to the board and the trustee members. They provide additional advice to the board as well as trustees. Yes, sir. So with this, advisory council is done. Then interpretation committee. Interpretation committee does what, sir? It provides rapid guidance when IFRS are interpreted differently. IAS and IFRS is made. we think you should think in this way, but you're thinking this way, then interpretation committee will say no, no, the interpretation regarding or the knowledge or the way you're interpreting the standard is wrong, wrong, wrong. This is the actual way. So they provide a rapid guidance whenever there is a issue. Whenever there is a issue, like IFRS 18 also came, IFRS S1 also came, S2 also came. If there is any issue in understanding the standard, they will come and they will guide us. All interpretations made by IFRIC must be approved by IESB. Very important MCQ. This line. Will interpretation committee approve the interpretation and send it to the stakeholders, etc., or the users? No. It will first need approval by IESB, because IESB is the one who is preparing the standards. So whenever interpretation committee is interpreting, no issue, but they have to take the approval from IESB, because ultimately they are making the standard. Yes, sir. Then issue addressed. What are the other issues interpretation committee will consider? New financial reporting matters. There are any new financial reporting matters which are not covered in IAS and IFRS. They address these issues also. To whom? To the IASB. They discuss with other parties also, saying, okay, this is the issue. Here standard is not that, we will inform. So these are the additional issues which they consider. Again, important for MCU this point. New financial reporting matters not directly covered in IFRS. Many students will think it is IASB. There is a difference. Whenever there is conflict in the interpretation of the standard, they provide proper guidance. Yes, sir. What is the aim of interpretation committee? The aim is to reduce confusion. The aim is to reduce the confusion and achieve a common understanding of the standard. To reduce the confusion so that each and everyone have the same understanding regarding the principles and the standards. Yes, sir. IFRIC also done. Then coming to the next one. How an IS and IFRS is developed. One more important topic. Sir, IS and IFRS, how it is developed. First, there is a issue paper. Yes or no? Issue paper कौन बनाता है? Sir, a committee is that. That committee is what? Advisory council. An advisory council will be appointed. This advisory council will connect with each and everyone. Yes, sir. And then they provide, okay, these all are the issues. They identify the issues. They make a issue paper. They make a issue paper. Then once issue paper is done, what they make? They have identified the issue. They make a what better? Discussion. They make a discussion paper or a document. Is it compulsory to make this discussion paper? No, it's not must. Issue paper, discussion document. Then they have what? Exposure draft. In exposure draft, what we write? The IS and IFRS which we are planning. If this is the issue, we are planning this IS and IFRS, it is written in this exposure draft. This exposure draft is written. This will be allowed for public comment. As a ACCA member affiliate, we can comment saying this is wrong. This should be this way, etc. So the public will comment on this. Once public will comment, what they will say? Once public will comment on this exposure draft, they will make changes. They will make what? They will make changes to this. They will make changes to this exposure draft. And once discussion paper, see, discussion paper is done. Discussion paper is also allowed for public comment. Then they make the changes. Then they publish the exposure draft. This is also allowed for public comment. And then the final IS and IFRS is published. Then the final IS and IFRS is published. Any doubts to anyone? Clear, everyone? Clear? Sir, what is first thing? Issue paper. Then discussion paper. then exposure draft, then final IS and IFRS. And when final IS and IFRS is published, approval should be by 9 out of 14 members. Out of 14, 9 should approve it. 9 should approve it. Yes, sir. ISSB, International Sustainability Board. Why this board was introduced? Because of this disclosure regarding sustainability. So, what are the disclosure regarding sustainability? If today, which one? सब ये ISB करता है सारा कुछ. ISB. Then coming to ISSB, sir. ISSB is what? International Sustainability Standard Board. So this board focuses on what? Developing sustainability related standards. So why sustainability related standards are very important? Understand here a very important point. The important point is that when coming in today's world, if I say I give you an option to invest in Tesla or in Maruti Suzuki, you will try to invest in what? Tesla only. Why? Because one point of view is that what, sir, it is green, it is electric, no pollution, etc. So same way, when coming to the companies have to disclose. Today if we are into car business, into business of let's take car business, and it's also diesel car. Now what is the risk for us? What is the risk for us as customers are shifting to green? Can I say the risk is what? The sales will fall down, etc. All these are the things which we have to consider. These points we have to consider. So that is the reason the company have to make some or the other disclosures regarding sustainability. What they have to disclose, understand. There are two standards, IFRS S1, S2. S1 only will be tested for you. Yes, sir. S1 will be tested, S2, no, it is part of SBR. It's relating to climate. So now see, what is the aim, everyone? What is the aim of ISSB? The aim is the aim of ISB is to help investors understand risk and opportunities affecting entities. Because of sustainability, what is the risk and opportunity? Whether today Reliance is into oil business, what is the problem with that? Will they continue this in future? Will it be possible for them? No, that is a risk. What could be the opportunity? If they've entered into green energy, that is an opportunity. So all this thing which we have to mention, because so this risk and opportunity will affect what? The company. It will affect the company better. Companies what? Financial performance, position, cash flow in future. As well as if Reliance company is still saying that we need 10,000 crore rupees to for oil business further, the investor will say what? Let's take it as 2040. Year is 2040, and Reliance is asking that we need $10,000 to invest in oil. Many will say that we have shifted to EV. Why do you need the money for oil now? So when they raise the fund for oil, the interest which is applicable to that, the return which we require will be more, because risk is that simple. Sir, IFRS S1 general requirement. What are the general requirement? Acts as a foundation standard. Like we have IAS 1 and IFRS 18, no? Same way we have this as a foundation standard for your sustainability related things. Yes, sir. Now, what is the objective? See, the objective is what? We have mentioned the aim is to disclose the risk and opportunity that affects the business. What is the objective? To disclose sustainability related risk and opportunity that could affect the cash flow and long term performance, as well as what? Long term performance, as well as the cost of capital. So to raise the finance, what is the cost of capital? How this will affect the stakeholders? How will stakeholders consider this? How will it affect the the economy, society, its value chain? All this we have to report. Now if I say today I'm doing business regarding EV business, but in EV there is one battery, we require a battery, and this battery will cause a huge damage to the environment. Even though I am not polluting the environment, but my value change, my entire business is based on this model only. So either I make pollution, either the pollution is from my side or from a supplier side. Both are one only. The standard is saying that also its value change. When coming to the customer, supplier, your each and everything should be considered. What does value chain means? Linked to the business, each and everything. Yes, sir. Now coming to conceptual foundation of IFRS S1. So what is the conceptual foundation? We follow the qualitative characteristics, same as your Conceptual framework. Then, sir, material information should be disclosed. The entity should disclose what? Material information. Yes, sir. Like when coming to a big company, there are a lot of risk when coming to environmental related issues. There are a lot of issues. They have to prioritize, which is the first risk, which is very important, which we have to eliminate. You have to consider that also. So qualitative characteristics, yes, sir. Like we consider what? Materiality, faithful representation, relevance, and faithful representation here also. Then coming to the core content of IFR. Sir, what should we disclose, sir, actually? There are four things, four content which we have to disclose. First one is what? Governance. Governance means what? Governance का meaning क्या है? Which body in the company? If today we are running a business, so which is there a separate board? Is there a separate body which is working on the sustainability related problems? Sustainability related problem, any risk or opportunity? Is there a separate group of people or an individual or a board which is working on this? If you say yes, then disclose it. Yes, sir, we are working on this, etc. What is their role, what they do, etc. Then strategy. What is the strategy? How will you overcome this? You have to mention the risk and opportunities affecting future prospects. If you come with a strategy, how this will affect in future, what will be the impact to your business model, value chain. So business model, value chain, financial performance, cash flow, everything will come in what? Strategy. Risk management. Sir, how we will manage the risk? How we will manage sustainability related problems? Sir, first we will identify which is the first we will assess whether how many risk is there. Then we'll monitor. Then we'll give the order. Okay, this is the important. Then second one, third one, fourth one. Then we'll try to eliminate each and everything. Then targets. In case of targets, what will the company consider? Okay, sir, every year 2% of revenue we are spending on what? We are spending on the welfare of the society. 2% of the revenue we are spending to reduce the carbon footprints, etc. Carbon dioxide or whatever emission. Or 2% of the revenue we are using to clean the water, because the factory is near the river and it's creating a lot of pollution. So we are using. Or what is the target? Our emission, CO2 emission was 40%. Our target is that we will reduce this by 20% in the current year. Okay, they are mentioning it. And in the next year, they have to provide evidence also. Okay, they have reduced this. They are achieving the target. All this should be done. So this is what your sustainability related thing. So with this, your conceptual and regulatory framework discussion is also done. Any doubts to anyone in this topic? Any doubts? I think it will be boring only, sir. Theory क्या करवा रहे, but theory बहुत important है. Understand? Whenever you see questions, FR out of 30 questions, you see 30 means around 7 to 8 to 9 questions. I think theory questions will be there for sure. As I've seen slowly, examiner like in FM also we have theory. In FR also, the examiner has started asking a lot of theory questions regarding the concepts. So be good with theory also. It's not that only numbers. So conceptual framework is done, sir. So now the last topic which is pending is what? Interpretation. Let us take break, come back and start with your interpretation. Okay, everyone. It's 7:27, 7:43. Everyone be back. Chalo, chalo, everyone come back. Everyone back. Yes, okay. Now coming to the most important topic for your FR, ratio analysis and interpretation. Many students have problem with this. Before moving forward, few points. See, when coming to ratio analysis and interpretation, when you see the question and when you see the answer which is provided by ACCA, the answer is too long, too big. You will not be able to write that much. What is required if a question is there? Let us take the interpretation is for 12 marks or 14 marks. Bare minimum, either if I say you can write down 14 to 15 sentences, or I say 7 to 8 paragraphs, not more than that. And when coming to analysis and interpretation, do not repeat your points. Many students will do that. Keep on repeating the same point, same point, same point. No. I will mention. Do not repeat the points. And whenever coming to interpretation, try to link to the case scenario. Whatever case is saying. Like I say, when the question is saying that analyze the financial performance and position. In performance, what we see, sir, whether revenue is growing or not, operating profit margin, net profit margin, gross profit margin, ROC. So when you're saying operating profit is increasing, what is the reason behind that? Revenue is increasing, what is the reason? You have to mention these reasons. Rather than just if you write down that revenue is increasing when compared to previous year, this is good for the company, 0 marks. Why the revenue is increasing? Either the selling price is increasing or either the sales volume is increasing, or I say good demand is there in the market. Either this, any one of the point will be mentioned in the case, link it and write down. Chalo now. A quick exam guide. Section in section C, important section A MCQ, one or two MCQ question can come. And section C, as you know, sir, interpretation is important. Now, exam structure. See, as I mentioned that section A, as I mentioned, knowledge, as well as you should know whether if this adjustment is removed, what will happen, whether the ratio will increase or decrease, etc. XYZ. But when coming to section C, understand if the question one is from single entity point of view, a single entity question, then the interpretation will be from group point of view. If the question one is consolidation, most of the time we see then the interpretation question will be from a single company point of view. So we have seen this pattern. So it's very important. The ACC has mentioned this in the examiner report, etc. XYZ. So focus on that, as well as out of 20-mark question, calculation will be for 4 to 6 marks. Easy. Get that. 4 to 6 mark easy calculation will be there. Focus on that. And when coming to interpretation, out of 14 to 16 marks of interpretation, 16 will never come, but mostly it comes to 14 to 12. Out of this, 8 to 9 marks will be easy. Focus on this 8 to 9 marks first. Then go to the next 5 to 6 marks, 5 to 4 marks. Yes, sir. Chalo now. Now, starting with your this one, performance ratio. The first ratio is what's a revenue. What will revenue say whenever a performance? The question is saying that analyze the performance of the company. Start with the ratio. Start with the ratio, which is the first ratio, revenue. It's not a ratio, it's revenue. Why revenue is increasing or decreasing? Mention this. So that again the link will come to your what operating profit. You need not again mention that revenue was increasing because the selling price increased. That is the reason operating profit. No. If you have already mentioned that revenue is increasing because the sales volume is going up as there is a good demand in the market, then when you come to operating profit or gross profit margin, you can say, okay, revenue was increasing. That has a direct relationship with gross profit margin. So see now, revenue is a starting point of performance analysis. If revenue changes, it may be explained using case detail, not generic comments. Generic comments will not get marks. So what are the reasons, sir? Sale volume will increase because marketing is done in the current year. A very good marketing is done, or the selling price is increased, sir, or we are entering into a new market, a new product is launched, sir. All these are the reasons. So why will revenue decrease? Fall in the demand. So competition is there. Competitors are reducing the price. We are also reducing the price. Sir, sales volume is good only, but still the revenue is decreasing. In the case, it could be mentioned that competition is very high. If competition is very high, we are reducing our selling price. Loss of major customer. Yes or no? We have cut the price due to competitive market. Yes, sir. Or we are selling the product at loss only. All these are the reasons which you have to identify. Exam writing, how will you present it? If you write down revenue increased by 10% when compared to previous year, this is good for the company, 0 milega. Yeah, this is good start to write down that revenue is increasing by 10% when compared to previous year. Good. But after that, you have to link to the case. revenue increased by 10%. This is due to the high volume because the company has entered into a new market, they have introduced a new product, etc. Mention this. This is the link which ACCA requires rather than general comments. Whenever question comes regarding gearing, many students will write, sir, gearing is high, it is risky for the company, etc. Alto falto. Why gearing is increasing, Baba? In the question, they will mention they have taken any loan, etc. Mention that. Then you'll get full marks. Yeah, the points which you mentioned is right only. It's not wrong, I'm saying. It's right, but linked to the case. Yes, sir. So revenue done. Then gross profit margin. So what is the formula for gross profit margin? Gross profit percentage is equal to gross profit divided by revenue into 100. What will gross profit margin tell you? Measures profitability of core trading activities before any overheads, before any major expense, before any major administrative expenses like salary, etc. We consider the core trading profits here. Like I purchase an item for 10, I am selling for 20. In this 10 rupees profit, I have not reduced the salary, I have not reduced the rent, electricity bill, etc. So it's the core profit which I'm making. If the gross profit margin is good, that means the company is able to sell the goods at a higher margin, basically. See now, and one more basic rule, everyone. Whenever your denominator is increasing, what will happen to ratios? I say 100 divided by 10. What is the ratio? Not into, see, 10. If I say this becomes 200 and this is 10, what is the value? 20. So whenever numerator will increase, what will happen to ratio? Ratio will also increase, sir. If numerator will decrease, denominator also will decrease. You have to understand, very important. This will help you for your MCQ as well as thinking. Is a denominator is what decreasing. If denominator is decreasing, ratio will increase. If denominator is decreasing, ratio will increase. So numerator has what, sir? Numerator has a direct relationship. Denominator has an indirect relationship. Remember that point. Yes, sir. So see now, I say, why will gross profit margin increase? So selling price increased. So raw material is cheap. Yes, we are getting more discount from the supplier. Yes, sir. Because either revenue is more our GP will increase, or the cost revenue same, sir. Revenue was same, but the cost of sales decrease. Why? Because we are getting better discounts from the supplier. We are paying in cash, sir, or we have changed the supplier. We are purchasing from China, not from India, where it is cost many things in that way. So these are the things you have to mention. Yes, sir. Then why will gross profit margin decrease? Sir, we have reduced the price as well as our cost of sales has increased. We have reduced the price, sir. With reduction in the price, the revenue is decreasing, but cost of sales is same, sir. There is no change in cost of sales. So the manufacturing cost has increased. Yes, sir. The purchase price has increased. All this should be considered. Yes, better. See, exam writing, and most of the time I've seen this gross profit margin will be based on 2 to 3 factors only, not more than that. If I say two companies, when I compare, when I compare, let's take when we compare with Zudio with Zara, what is the thinking? So customers are premium, they are charging premium price. Here they are charging less price. Yes. So this is the way you have to think. Your revenue will increase because, sir, in Zudio, what we say, the volume is more, the price is less. Still, the volume is good, the revenue is good. But when coming to Zara, the volume is less. The price which we charge is to premium customer. So the customers are ready to pay a premium because of good quality, etc. A lot of reasons. So GP margin fell by 3% due to company offering 10 percentage price discount to attract customers. So when the company is giving discounts to attract customers when they are new, can I say the revenue will be less for sure? Revenue is less, gross profit margin also will be less, sir. So this is the way you have to link it. Then operating profit margin. Sir, operating profit margin will say what? Operating profit margin shows how well the company controls all of its operating expenses. I say the company's operating profit margin is 90, but the no, sorry, my bad. Gross profit margin is, I say, 90 percentage. Sir, operating profit margin is only 10. That means what? Can I say the company has what? Operating expenses are more. That means the company should do what? So the company should control it. The company should control these. Sir, what could be operating expenses like administrative expenses, impairment, provision, all these items? And when coming to this operating category, there are one-off items. Yes or no? That also you have to consider one-off items. A lot of times we have seen in every exam, in every question you see, one-off item will be there. A one-off item means what, sir? Sir, in the current year, we recorded a provision for restructuring. Or, sir, we dispose of a property for loss, sir. Loss. Because of this loss, the percentage became 10. Will this continue in future? This will never continue. So, what should you do to get additional marks? So, remove that one-off item and recalculate the ratios. If the question is saying well, if the question is not saying, still recalculate the ratio, you will get marks, zero point 0.5 marks. Yes, sir. See, operating profit margin increases, sir, because the cost has been controlled properly, sir. Reduction in administrative or distribution cost. Any one-off gain is there, sir. During the year we dispose of a PP, we have a gain of $100,000. That is the reason our operating profit is high. But will this continue in future? It's not possible. So remove that and then calculate the ratio and compare it. Yes, sir. Then why will your operating profit decrease? Because high overheads, sir. Rent expenses are more, marketing expenses more, sir. We are into initial stage. We are doing a lot of marketing. Sir, one-off cost like restructuring, legal fees, cost is not properly controlled. All these are the factors which you have to consider. Sir, my GP margin is only falling. If GP is falling, operating profit margin also will come down automatically. So how should you present? Operating profit margin fell more than GP, suggesting higher overheads or one-off expense this year, such as restructuring mentioned in the scenario. Use that whatever is mentioned in the scenario. See, it's not that without any reason the operating profit or gross profit margin will increase or decrease. Some or the other reason will be there. Sir, if the reason is not directly stated, then what should we do? Then see in which sector the company is, in which sector the company is dealing. Then try to link from that point of view. You will still get marks. Then ROC, sir. ROC means what? Return on capital employed. Sir, today I make a profit of 200 by capital employed of 1000. That means what? Sir, with the capital of 1000, we are making 200 ka profits. So this will say how well the capital is used by the directors or by the company to make profits. Sir, what is PBIT? Yes, sir. Capital employed क्या formula? What is the formula for capital employed? Total assets minus current liability. Total asset minus current liability or equity plus debt. Now see everyone. I say your profit is 500. Capital capital employed is 5000. What is the ratio, everyone? Please say me the ratio. 10 percentage, sir. Now I say your profit for the next year is 400 and your capital employed is 6000. What is the ratio? What is the ratio? 6.8 or something. 6.666. Your ratio is decreasing, yes or no? Now, what is the reason? Can I say profit is decreasing? So, if the operating profit is decreasing, automatically what will happen to your capital employed? That also will decrease. Sir, if the capital employed is increasing, automatically the the ROC will decrease. So, if during the year any debt is there, we have taken any additional loan, yes, sir. If we have issued any new shares, all this you have to link. And most of the time we have seen that ROC will reduce because of these two things only. And that is what profit because of one-off item and here equity shares or liabilities issued. New loans is taken. So ROC will say measure how efficiently the business uses all long-term funds to generate profit. How well they are using the funds to generate profit. Sir, ROC movement. Everyone see now. Better profit margin. If lease is recognized, what will happen to ROC? If during the year there is a lease. Yes, 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 yes. Investing here, which man? That is an investment income. See now, it is what here? It is operating profit only. Yes, sir. Then, then what will happen? See, one more thing. Whenever revaluation surplus is there, revaluation surplus will do what, sir? Revaluation surplus will increase your क्या increase करेगा? Sir, equity. Sir, equity is increasing, ROC will come down. This is the one more way. Sir, what will happen sometimes we purchase an asset. I purchase an asset today. I purchase an asset on 31st December 2000 X1 at the year end. If I purchase that asset, can I say that will be part of equity or not? Yes, sir, because total assets. But regarding that asset, is there any profit in the year? No profits. So the comparison is not like with like, sir, we have included the value of the asset, but we have not included the profits from that asset. Yes, sir. Then exam writing. See, ROC falls due to new plant bought in September. Capital employed increased immediately, but profit did not reflect a full year of use, reducing efficiency this year. The example which I've given. The normal thing you can write down if operating profit is decreasing, sir, ROC also will decrease. If shares are issued, you can write down. But this is an important point. Yes, sir. And then see here also I mentioned one thing. Then coming to ROE, not so important. Whenever a question comes regarding performance, try for operating profit, gross profit, revenue, ROC, and asset turnover. ROE means what, sir? Here ROC was based on the total capital employed. Here ROE is only based on what? Sir, ROE is only based on what, sir? Only on the equity shareholders. So what we say, profit for the year divided by total equity. So it is only for the equity shareholders. So why will ROE increase? Higher profits, low equity base, share buyback, any dividend is paid. Sir, dividend is paid, equity will come down. So why will ROE increase, sir? New issues of shares, revaluation surplus is there, etc. Not so important as mentioned. Now this is very important. Each and every case you have to link this asset turnover. Sir, what is the formula for asset turnover? Asset turnover formula is what? Revenue divided by capital employed. Will this be in percentage? No, Baba. This will be in what? Times. So this will say asset turnover means how efficiently the business uses its asset to generate revenue. Sir, ROC was what? ROC. It was how well the capital is used to make profits. But here, how well the company is using the capital to make revenue. Yes, sir. So reasons for your increase in asset turnover, higher revenue with same asset base. Yes or no? Sir, we have the same capital, but our revenue is increasing. Can I say we've already discussed why will revenue increase? A lot of factors. Yes, sir. Sir, what are the reasons for that your asset turnover will decrease? Sir, we have purchased any new PP, revaluation surplus, equity share issue, etc. So whenever asset turnover comes, you have to link this to what bitten? You have to link this to ROCE. Yes, sir. So the asset turnover fell because of the new machinery purchased late in the year. Revenue has not yet increased. Yes, same thing we have discussed in your ROC. What is the other formula for asset ROCE, everyone? What is the other formula for ROCE? Asset turnover into, can anyone say me? What is the other formula? Asset turnover into what? Hmm. What is the other formula for ROCE?
Into operating margin, sir.
Into operating margin. That is operating profit divided by revenue into revenue divided by capital employed. These both will cancel. So ROC has a link with what? Operating profit margin and asset turnover. So when you see the question, if it is saying what your asset turnover is increasing, sir, if asset turnover is increasing, ROC should also increase, no? अगर asset turnover बढ़ रहा है तो ROC भी बढ़ना चाहिए. Yes, sir. If asset turnover is increasing, ROC should also increase. But ROC is not increasing, it is decreasing. Can I say operating profit margin is decreasing in that case? If asset turnover is increasing, sir, ROC should also increase. But ROC increase nahi ho raha. ROC is ulta decreasing because your operating profit margin is less. That is the reason. This is the way the link is that. Other than this, nothing. So with this, the performance ratios are done. Any doubts to anyone? See, as mentioned, do not go with the answers which are written by ACCA. Too long answers. Write down simple points as I have mentioned here. Link it to the case. Yes, sir. Then see everyone. Short-term liquidity ratios. Current ratio and quick ratio. Why these ratios are important? To see whether short-term liquidity is good or not. Simple. Current ratio formula is what, sir? Current ratio is current asset divided by current liability, and this will be what? In the ratio. If I say your current ratio, current asset is 4,000 divided by 2,000. So what is the ratio? 2:1. What does this means? Say me everyone. इसका मीनिंग क्या है? चलो 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 चलो, इसका मीनिंग क्या है? What does this means?
Current asset is twice of current liability.
Yes, so that means liquidity is good or bad?
Good.
Good.
Okay, so you will mention this better whenever. That means the company is not facing any short-term liquidity. Why? If you write down this, okay, Kaiko, why the current asset is more? Why will your current asset be more? Everyone say me. Because cash is more or trade receivable is more. Why will trade receivable be more? Credit sales. Link it. Here and there it will be mentioned in the question. So why cash is more? Because we are doing cash sales or we have disposed of any company. We have disposed of any company. Link it. Yes, sir. So see now. It indicates ability to pay suppliers and short-term obligation. Short-term financial stability is there or not? Yes, sir. So stronger the ratio means what? If my ratio is very strong, that means what? Are we using the cash properly? No. So it's not that it should be low, it should not be very high also. It should be in a mid range. 1 or 2 is the ideal ratio, we say. Yes, sir. So important interpretation points here now. Inventory is included, sir. In current assets, inventory is included. Can you sell inventory today only or it is difficult? Sir, it is difficult, sir. It is difficult. So many companies will do what? Many companies will try to manipulate this one. So instead, we have to calculate what? Quick ratio. So this current asset by current liability will also help for what for? Check cash flow balance also in the company. You should analyze from the point of view of receivable, inventory, and payable. Yes, sir. So that you get to know working capital ratios. Then reason for current ratio increasing. I mentioned increase in cash, increase in receivable, increase in inventory. That's why we are purchasing a lot of inventory today. Yes, sir. Any tax refund, one-off cash flow like sale of any asset, etc. So decrease in ratio, increase in trade payable or short-term borrowings, decline in cash balance like we are paying dividend, we are repaying the loan. Because loan repayment will not come in current liability, yes or no? That will come in non-current, sir. Yes, sir. These are one-off items which you have to keep in mind. No need to go in detail, like your insurance, any one-off sale of any PP, etc. Any settlement we have done, cash is less. Yes, sir. See now, in example, the current ratio improved to 1.5 due to high receivables and early settlement of supplies. Now, why will your receivable increase, sir? Because revenue. Why revenue is increasing? Because discounts are given. Simple. However, liquidity has not strengthened because early payment reduced the cash and the rise in receivables due to weak credit control. This indicates insufficient working capital management. Even though the ratio improved, Baba, but this is bad for the company because trade receivables are more. As we increase trade receivable, what will happen to your bad debts? Will increase, sir. You will not receive the money. Is there a guarantee that you will receive the money? No. Right on. This is a general point you can write on. No issues in that. But first you have to mention, sir, receivables were increasing. Okay, receivable were increasing because revenue was increasing. Credit sale. Okay, no issue. Then you can write down this general point. No issues. ACC will give you marks. Then coming to quick ratio. In quick ratio, what do we see, sir? Current asset minus inventory. Why do we reduce inventory, bete? Why do we reduce? Can we sell inventory easily? Huh? Can we sell inventory easily? You only say me. It is very difficult to sell the inventory or not? Yes, sir. It's not so easy. Risk of obsolescence. Yes, sir. Inventory will move slow, sir. Yes, sir. Sir, if we are, it is difficult to sell the inventory. Then are the other risks also. Say in P&L expense will come, sir. We have to write down the inventory. All these are the problems. Yes, sir. The reasons are what, sir? The reasons are what? Same only. Not there. See here. The quick ratio decreased to 0.7 due to a fall in cash caused by legal settlement. Okay. So quick ratio came down because cash balance was very good in the company. Due to a big settlement which we have done with the court, our cash came down. So this is the reason that the liquidity is not good in short term. Simple. Yes, sir. Efficiency ratio. Now working capital ratios. Working capital ratio will say what? How good the cash is managed, for how many days the cash is stuck in the business, etc. So first one is what? Inventory holding period. What is the formula for this, sir? Inventory divided by cost of sales into 365. I say if your inventory days is 40 days in the previous year and now it is 60 days, is this good, everyone? See me? Is this good? No, it is not good. What is the reason? What will you say? Why will your inventory days increase, Baba? Why will your inventory days increase? Sir, we are purchasing more inventory. Now, why will you purchase more inventory? Sir, inventory days is more, sir. It is bad or good? Decide based on the this one data. So we are purchasing more because, sir, in future the cost of the purchase will increase, sir. The price will increase by 100%. Okay, then no issues. Today the ratio is bad, but in future it will be good, sir, because we are purchasing inventory today because in future the price will increase by 100%. But what is the other risk on one side? Sir, if it is our food business or like cake business, bakery, etc., what is the risk? What is the risk? Risk of what? Everyone say me. What is the risk?
Risk of obsolescence.
Yes, mention these keywords. But very rare working capital are tested. Very rare. It's not that frequently, but if it comes, it will be easy for you to explain. So inventory means what? So inventory holding period. For how many days we are holding the inventory? Simple. So longer the inventory days, it's a problem. So simple. So see now, inventory days increased due to accumulation of slower moving stock. Because sir, the competitor has launched a new product. That is the reason our inventory is moving slowly. Yes, sir. Or what could be the other reason why we will purchase a lot of inventory? Because sir, we have the fear of stock out. That could be stock out. Yes, sir. All these are the reasons which you have to mention. Read this point, everyone. So whenever your inventory days is increasing, it's always not bad. You have to see the reason. Sir, receivable collection period. Sir, trade receivable divided by credit sale into 365. What will this say? Receivable days measure how long customer takes to pay you. Higher days indicate weaker credit control. Yes or no? If weaker credit control in future, there is a possibility that we will not get this amount. Problem will be that. Yes, sir. Cash recovery will be less. Reasons are what, sir? Sir, because credit sale is more, sir. The credit sale is more because we are providing good discounts when compared to the competitors. We want to acquire the market share. Yes, sir. All these are the reasons. Exam writing, see. Receivable days increase due to extended credit terms offered to a new distributor. Yes or no? Today I say that I usually give 30 days credit. Then I change my policy. I say I give 60 days. Can I say automatically my receivable will go up or not? Yes, sir. For sure it will go. But the risk will be what? Bad debt, we have to write it off. If you write off bad debt, P&L expense, profits will come down. Again, a problem. If receivable days are more, the risk is very high, as well as the cash is stuck in the business. Then coming to payable days, bete. Payable days क्या होता है? Trade payable divided by credit purchase into 365. Yes, sir. Use cost of sales is purchases not given. ACC exam advice. Yes, sir. Payable days means say after how many days we are doing the payment to the supplier. If it is high, it is good. But if it is high, I say it was 40 days first, it is now 50 days. It's okay. From 50 days, it is going to 120 days. Can I say it's a problem or not? We will not get discount from the supplier. Yes, sir. Then supplier will not do business with us. It will create a problem on the ongoing business activity. All these are the problems which we have to consider. So see now exam writing. 。  . 。 . 。 . 。 . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . 。 . . . . . . . . . . . . . . . . 。 . 。 Read this point, everyone. Any doubts? No, no. Yes, sir. So payable days. Then working capital. Working capital comes for your section A, we can say sometimes. So how do we calculate the working capital cycle? So inventory days plus receivable days minus payable days. This will say what? This shows how many days cash is locked in operating cycle before recovered. Yes or no? For how many days the cash is stuck in the business. It will say about this. If the working capital cycle or the this value which we are getting is more, it was 100, then 120, 150. It's very bad for the business, sir. Without cash, it's difficult to do business. Yes, sir. Then long term ratios, gearing and interest coverage, very important. The working capital are not so important, but when coming to gearing and interest coverage, very important. Whenever a question comes that discuss the liquidity point of view, the gearing point of view, so gearing and interest coverage ratio, right? Discuss both these ratios. Yes, sir. So see now, gearing ratios will be what's up? Gearing ratio, debt divided by equity or debt divided by debt plus equity. Today I say my debt is 100 and I say my equity is 50. What is this? What is this? Is this good or bad? You only say me.
Good, sir.
Good. Why? Because can I say my debt is what 20% of the equity? That means the company can still borrow money. Shareholders are happy because the interest is paid less. They will get more dividend. Yes, sir. In the exam scenario, what will you do? Use the formula which is mentioned. Out of these two, it will be mentioned in the exam scenario. Use that. So debt includes what? Long-term borrowings, bank borrowings, loan notes, preference share, classified as liabilities, lease liabilities, current plus non-current, both the things, sir. No, bete. It does not have. I mentioned in the class when coming to capital intensive business, what is more? When coming to capital intensive business, the debt will be more for sure. Yes or no? Yes, sir. It will be more. Simple. Then, sir, see now, what gearings tell you? How much? Okay, then the other one. 100 divided by 600. What is this percentage? ये कितना है? 16. So can I say my debt is 16 percentage of the total finance? My debt is 16 percentage of the total funds which we have taken. So in that case, how will you explain this? Gearing measures how much of the business is funded through debt compared to equity. Simple, sir. Now, what are the risks, sir? Dividend, interest, these all are the risks. Like construction, property development, infrastructure companies will operate at what? High gearing only, sir. Without debt, it's very difficult for them to do business. And you know why gearing will increase, why gearing will decrease. Yes, sir. But what is the exam writing? See now. Exam writing important point. Always link to the scenario, reason for the movement. Comment on risk, stability, cash flow pressure, ability to serve debt. Now, if gearing is more and the profits are less, you only say, what will you comment? You get to know, see, gearing is more, so profit is less. What will you comment? What will you comment, everyone? Chalo, 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 chalo. What will you comment here? Simple point. Can I say gearing is more, profit of the company is less? That means the company is into bad situation. Profits are also less. That means profits are not sufficient to pay the interest in future years. That means the company can come into losses. Yes, sir. All those things you have to mention. Why will the gearing increase? Because the company issued a new long-term loan to fund expansion. This increases financial risk as additional interest payment must be made each year. Yes, sir. Then coming to interest coverage. Sir, interest cover, what will happen, sir? We'll compare the profit before financing and income tax to the interest expense. So we get to know ki whether I say my profit is this one and my interest is this one. What is the ratio? So the ratio is what, 10? That means can I say my profits are strong enough to pay the interest? I can pay the interest 10 times or not? Yes, sir, I can pay the interest 10 times. If I can pay the interest 10 times, can I take more loan? Yes, sir. We can take more loan for business purpose, for expansion purpose. In many cases, we see when two companies are given, one company has good gearing, one company's gearing is very worst. In that case, what you can comment? What is additional comment you can give? Additional comment is what? That's what is the additional comment you can give? One additional comment you can pass saying that A company's gearing is good, B company's gearing is worse. That means B company will not be able to take funds to do expansion, and both company is focusing on expansion. So you can link this way. So interest cover will say whether the company is in a good position to pay the interest or not. Yes, sir, simple. Now see exam technique, exam writing. Always link both profitability and borrowing level. As I mentioned to you, whenever gearing comes, link it, whether it's safe or risky or not, based on ACCA benchmark. It is mentioned by ACCA that you have to mention this interest coverage linked with profit, whether profits are good enough to pay interest or not, whether we can take more loans or not. Then, sir, sometimes one-off event is that interest coverage fell from 5 to 2.5 due to one-off restructuring. Will this repeat in future? Nahi, Baba, this will not. As well as increase in borrowing, we have taken more loan, but this one-off restructuring will not be in future. So it's okay. Yes, sir. Then see the next one. Everyone, please read this. Examiner advice. Whenever balance sheet is given, P&L is given, see the cash balance also, whether the company has sufficient cash to pay to pay interest or not. Yes, sir. Done reading? Yes. Understand that. If data is only not there, then generic comments will give you marks. Understand that. But mode of in each and every question, data is there. Then coming to investors ratio, sir. Investors ratio are important, yes, from MCQ point of view and sometimes from section C point of view. Sir, dividend yield. How do we calculate dividend yield? Sir, dividend per share divided by share price into 100, we get dividend yield. So the shareholders get to know, okay, whether the dividend is paid or not, whether what is the yield, the percentage. Today, if I invest in this company, what is the return I will get? Yes, sir. Dividend cover. Dividend cover means what? How many times the company can pay dividend? Profit for the year minus preference dividend. Yes, sir. Profit attributable to ordinary shareholder divided by ordinary dividend. What is this? I say profit attributable to this ordinary shareholders is 10,000 divided by 100 is the dividend which they have paid. So the company is able to pay good amount of dividend. They can pay 2 to 3 times. It's very good, sir. If preference shares are classified as liability, if preference dividend is already treated as an interest expense, do not deduct it again. I mentioned preference shares is liability, that do not consider it again. Simple. Then P ratio. P ratio is what, sir? Share price divided by EPS. Now, if I say today the share price is 10, And EPS is 2. What is the answer? 5. I say here share price is 20, EPS is 2. This is 10. What does this means? What does this means, everyone? What does this means? Can I say, sir, for 2 rupees of earning or $2 of earning, we are paying 10 rupees, we are paying 5 times or not? Sir, in this company, for 2 rupees of earning, we are paying 10 times. So P ratio means what? For 1 rupee of earning, how much you're paying? So for 1 rupee of earning, I'm paying 5 rupees. For 1 rupee, I'm paying 5. To earn 1 rupee in that company, I'm paying 5 rupees. Yes, sir. Then, interpretation not important. Now coming to the, till now we have discussed what? The ratios. Now coming to the important points. What is the first important point? Use table provided in the exam. Yes or no? The table will be given to you. Use it. Write down the year 2000 x1, 2000 x2. It will be provided. Write down the formula and write down the numbers and get the answer. Yes, sir. Then use headings like performance. Under performance, write down revenue, operating profit, gross profit, ROC. Use subheadings and then frame the answer in that. In position, current ratio, quick ratio, payable, receivable, inventory, gearing, interest cover. Use headings and then give 2 to 3 lines as a what we say conclusion. 1 or 2 lines, it's enough. So for each and everything like revenue, write down 2 to 3 sentences, it's enough. First, start that revenue is increasing by 10 percentage, it is good for the company. The revenue is increasing because there is increase in the volume because of huge demand in the market. That. Then coming to GP margin. The GP margin has increased when compared to the previous year by this figure. The increase is because that the revenue is increasing, as we have discussed above, as well as the cost of sales is also changing. The cost of sales also has reduced because we are purchasing from very good suppliers, we are getting good discounts. Yes, sir. Interpretation writing must be simple and case linked. Understand that. Do not write generic sentence as I mentioned, yes. Okay. Then provide working even if ratios are wrong. Yes or no? Even if your ratio is wrong, but your interpretation will also be wrong sometimes. But still, you will get marks better. Why? As we know, follow on marks is there in your ACCA. If your first step is wrong, for sure your step 2, step 3, step 4 will be wrong. But still, ACCA will give you marks if the step 2 and step 3 logic is right, etc. Yes, sir. Then, whenever a comparison comes with sector average, a company is given and the sector data is given. When you compare this, look for what? A lot of points. Yes, sir. Mention whether it's good, bad when compared to the sector or not. Then coming to the most important topic, one-off item. Whenever a question comes of one-off item, like in the previous year, there was no gain or loss on the disposal of property. This year it is that. So last year the operating profit margin was 20. This year it became 50 because in the current year there is a gain on disposal of a property. Remove that gain and recalculate the figure. Then only you will be able to provide a like with like comparison. Yes, sir. Very important one-off item. We have done 8 to 9 questions in our regular class, and we have seen for each and every question one-off item. Hey, hey. Understand that. Then read the scenario like a story so that it will be easy for you to link. And write down what? Simple and clean sentences rather than repeating the sentences. It is important that you write down short and simple. See, whatever you are able to link first, write down that properly. What I say, yes, sir. Sir, we are able to identify 8 to 9 sentences. Let's say 7 only. Write down that 7 sentences properly. After that, whatever you want, you write and come if you have time. Okay. But the if you know sir, revenue is increasing because of this, write down that properly, beta. Out of 12 marks, 7 marks are guaranteed. After that, whatever you want, you write and come. If you get 2 to 3, also good. But first, if you know the concept properly, if you know, okay, so this is increasing because of this, write down it properly. Then coming to the most common scenarios that comes in your exam. As many will be knowing this, it's nothing new. Comparison of one entity over two periods. If one entity is there, current year, previous year, why there is a change? What are the reasons? Did company launch a new product and new market selling price? These are the linkage which you should search. Yes, sir. Check the performance, whether the ROC or the GP margin is increasing or decreasing. Mention on that. The GP margin is increasing, sir. GP margin is decreasing because we have given discounts so that our revenue is maintained. Identify one-off items. Yes, sir. One-off items is very important in when we compare previous year and current year. See here, exam sentence. A one-off gain of X, whatever amount, inflated the operating profit this year. Underlying performance is weak once this non-recurring item is removed. You can say once we remove this non-recurring item, the operating profit is worst. So that means the company is not doing good. They have just manipulated the records or books by just selling this asset. If any major investment is done, a new product launch, etc., keep in mind. Yes, sir. Then two entities for the same period. When I compare Reliance and TCS, what are the points I have to focus? Sir, into which sector they are? What is the selling price? Are they charging premium? Whether the customer is a mid-range or mid-range customer, etc. Decide on that basis. Then we say what? Sir, accounting policy. Whether the company is following cost model or revaluation model. See that, because that also will create a problem, no? If revaluation means more depreciation, yes, sir. So when you want to compare two companies, see what's a target customer selling premium or whether they are selling some premium products, etc. XYZ, whether they have good market share or not, all these things. Then accounting policy. See, one uses revaluation, one uses cost model, one uses FIFO, one uses weighted average cost. Depreciation method also will create a problem, as you know. Then, whenever you compare any companies, compare the liquidity and working capital. I mentioned you. Whenever you compare two companies, you have to mention which company's liquidity is good. What is the reason behind that? What is the gearing? Because when I compare two companies, why will I compare two companies? If I want to acquire a company, so in that case is what we say. We have to compare the gearing, saying that the company's gearing is very high. So in future, it will create a problem. Sometimes what we see in the question that it is 2000x9 year end. You acquire this year. But in 2010, you have to pay $10 million of loan. Arre baap re baap. Today I acquire in the next year only I have to repay. Consider this point also. Yes, sir. So see, when the question involves choosing a target for acquisition, in that case you have to give your conclusion. Conclusion is very important in this case. Yes, sir. So I see one question. Okay. Yes, we have seen a lot of examples also. When we discontinue to mention that, then we have discontinued this operation. So this operation was doing good or bad. Then each and everything you have to link on this basis only. Then compare the individual performance of this, compare the individual performance of this, compare the overall, you will get to know. In this case, whenever the data is given for two different things, it becomes easy to write points because you can write a lot. You can easily link and write a lot. So the second type. Third type is what? Entity compared with sector average. Whenever we compare with sector average, as I mentioned, in sector also you have to see the budget, product range, customer, pricing strategy, etc. Yes, sir. Why the sector is making good profits, we are not able to make. See that any one-off item. Check the year ends, whether the year ends are different or same. Many times we see that the year end is different or same. Identify the accounting policy. See the accounting policy I mentioned. Then assess whether the company's performance is better or worse when compared to the sector average, as I mentioned. So sector average is showing sector average is 15 percentage operating profit, but our operating profit is only 10%. What is the reason? So the reason is this: the companies in the sector are able to control the cost, but we are not able to control the cost. What is the reason? Mention that also. Yes, sir. So with this part is also done. So most these are the three type of question which comes usually from a this point. But now coming from the consolidation point of view, when coming to consolidation point of view, what are the important things? Acquisition of a subsidiary. Sir, whenever I acquire a company, in the current year I prepare CFS, but in the previous year do I prepare CFS? No. Will the comparison be like with like? Nahi, Baba. No. The comparison is not like with like, sir. You have to mention that also. Simple. Then what I say, one more point, understand. What is one more point which is important you have to understand is that I say I acquire the company at the mid of the year. I acquire the company at the mid of the year. If I acquire the company in the mid of the year or at the year end, can I say the assets and liabilities are included? All the assets and liabilities are included. But your profits are included for 6 months or the profits are not included only. This is also not a like with like comparison. As well as sometimes I purchase a subsidiary. Both the subsidiaries will have different profit margin. See it. Many times, what will the company do? If I am doing business, I will purchase a subsidiary. Why? Because my business is going down. I just purchase that subsidiary. I show okay, profit is good, profit is good. No. Then, sir, intra-group transaction must be eliminated. Yes, sir. See whether intra-group transactions are eliminated or not. What will the question say? The director is saying that we acquire the company, so we assume that the profits will be very good, etc. But we are selling within the company, the profits are eliminated, everything is eliminated. There will be no such profit reflected. Then goodwill impairment, mention that also. Yes, sir. Then here the comparison is not like with like because previous year no subsidy, current year subsidy included. So mention these results are not directly comparable because the current year includes the subsidy while the previous year no. Once you have written this, it's enough. Do not repeat this point again and again. Marks नहीं मिलेगा repeat करने से point. Understand that. When coming to mid year, I know in mid year sir 100% subsidiary, but the only profit is for 6 months. So this creates ratio problem. The ratio is not properly calculated. यस सर देन इफ इट इज बॉट एट द ईयर एंड तो हालत तो इसका बहुत खराब है प्रॉफिट तो है ही नहीं प्रॉफिट इज नॉट इंक्लूडेड सर प्रॉफिट इज नॉट इंक्लूडेड ओनली दिस पार्ट इज दैट see this is from understanding point of view these points which are mentioned is understanding and it help you to understand how to frame short points it's not ki sir same aayega case mein you have to read the case and identify and then one off cost when we acquire a company sir one off cost is that acquisition legal fees etc yes sir all this also we have to consider acquisition part is well then check the gearing yes or no the subsidiary which we have acquired the gearing was 20 percentage suddenly the gearing became 80 that means the subsidiary which we have acquired has a very high debt yes sir so with this your acquisition part is done then coming to what sir then coming to disposal of subsidiary whenever we dispose of the subsidiary I dispose of the subsidiary this year if I dispose of the subsidiary this year will consolidation be done in the current year nahi baba but previous year it is done. So again problem. Sir, if disposal is there, we will record a gain on loss in P&L also. That is also a thing. So 2 marks, two simple sentences if you write. See now, I'll show you. Mismatch in ratio, you can mention this. Yeah, one of item. See. Gain or loss on disposal, redundancy, closure cost, legal or advisory fees, etc. See, the disposal generated one-off restructuring and legal costs that are incurred operating. So removing this will give a clear viewpoint. As well as for gain on disposal, we have a gain. So remove this gain, then only we'll get to know the actual profit of the company after disposing of the company. Yes, sir. Then year on year comparison that previous year it was not this year. So mention that or if we have disposed of the company in mid of the year 6 months profits are included but when we compare the capital employed these are not considered the assets are not considered sir and one more link to the cash flow so whenever we dispose of a company cash is coming in so the cash balance will increase in investing activity mention that whether this cash is used to repay the loan or the cash is used to give dividends mention these points it will be mentioned in the question So with this part is done. Yes, sir. So this is done. Then the last type of question that comes is what? Analysis of cash flow. In cash flow, what should you start with? You start with your answer for operating. So be good with cash flow analysis. Huh? This attempt important as the cash flow format has changed. So it will be important cash flow as mentioned to you. Yes, sir. So see an analysis of cash flow, operating activities. So my profit is 2000 rupees, but my cash flow is only 100 rupees. That means a lot of non-cash items are there involved, as well as can I say revenues more, etc. In that case, what will I say, sir? The revenues more, but we are not able to receive the money in working capital also. Do provide a link for that also better. Yes, sir. Then working capital. Yes, yes, yes. Then when coming to your investing, for investing what you can mention, sir, cash outflow is that, so today we are purchasing a pp, okay, no issues, but cash outflow is more, but in future profits will be there, we will use this. Any disposal of pp is there, any investment income, dividend receipt, all this will increase our cash balance. Mention that. Yes, sir. Then financing. In financing, what you can mention in financing, you can mention that we have gotten funds because fund has been raised, but sir, we have taken a loan. In case of loan, in case of loan, in case of a loan, I say gearing will be high. So even though the fund is coming in, but the problem is what? Gearing is high. Check whether profits are good or not. See, when coming to section C, calculation will not come of cash flow. Interpretation can come. Interpretation can come for 6 to 7 marks. Understand that. Cash flow, if in section C, if it comes, it can come one part, as I mentioned in the class. Either they say operating, either they say investing or financing. They can give you a question saying that, okay, make the investing part. So prepare the ledger account as we have done in a class. In class में question किया है. It's enough. You prepare the ledger account, say what is the cash movement. Simple. Yes, sir. Then link to the financial position. Yes, sir. Because of cash increase, inventory increase or decrease, etc. Each and everything. Then you can mention that cash is not equal to the profit because cash flows, your profit is being manipulated. A lot of non-money, non-cash expenses are included. All this will fetch you marks, as well as some warning signs. If cash flow is very weak, what is the warning sign? That sir, we have lot of loan, we will not be able to pay the interest on time, etc. Will not be able to pay to the suppliers, it will create a problem. All these points you can link it. So with this, your interpretation, basic understanding, etc. is done. But what did I mention here? Keep this in mind. Still you have good time for interpretation. Just pick two questions every day till your exam. Two questions every day you do, it's enough. Read the question, read the answer. When you read the answer, first read the question and analyze, okay, these are the points I will be writing on my own. Type it out, then compare your answer with the answer which is written back. Even though if you are able to write 60 to 70% out of that, it's enough to score good marks. Understand that. So with this, the ratio part is done. So with this, we have completed this part also better. So with this, your revision marathon is done. I hope there is no doubts to anyone. Yes, yes, it is included. Revaluation has a link with gearing, nahi baba. Revaluation has a link with gearing. Yes, equity part. Equity is increasing. So with this, your revision marathon is done. I hope the 4 days revision which was done was helpful and you have understood the mistakes which you should avoid in the exam. Still, you have time. Be calm, give mocks, do interpretation questions, and do single entity, do consolidation questions, do MCQs. If you have done MCQs, if you have done any mistake in an MCQ, if you have noted it, revise it. Okay, I'll not do this mistake in the exam. It's important, better. It's important. So with this, all the best for exams. And once you're done with the exam, please update me whether the exam was easy, tough, kaise tha. So do not worry, start from section A only, do section B. Do not spend more time on section A, section B. Sir, 2 hours spent kar diye section A, section B. No. What did I mention? Maximum 1 hour 30 minutes, not more than that, in section A, section B. Time management is very important. When coming to consolidation, you get a consolidation question and you get a single interpretation. Do consolidation first. If you feel, if you are good with single entity, and when coming to single entity, as mentioned, try to get 12 to 14 marks, which will be easy. PP calculation, tax calculation, then any adjustments which are required in cost of sales, etc. Do that. Easy marks are available. Yes, sir. So with this, ending the session. Bye bye. Have a good day. Signing off. Radhe Radhe to everyone. And once again, all the best for your exam.